welcome to our three guests today. We are very proud to have you with us today for various reasons. First is that few areas in finance over the last probably 3 years had attracted as much attention as blockchain those days. We have a pretty expert panel today with 3 different kind of actors in that field. So we are very lucky to be able to go through the whole spectrum of the blockchain, what it is, what it was, what it will change. Is it a protocol? Is it a game-changing industry? Is it limited to finance, or is it broader than that? We'll try to tackle all those subjects. So with us today, we've got Ashley Taylor. So you're a cultural implementation strategist with Consensys, which is a blockchain application production studio mainly on the Ethereum ecosystem. We've got Peter Todd on my left, which is, as he told me just before the event, an applied cryptographer, also a core developer of the Bitcoin protocol, which will be of interest for us to understand the link between the Bitcoin and the blockchain, and also obviously a cryptocurrency consultant. And last but not least, we have with us Lory Kehoe, which is a lawyer specialized in emerging technology and a consultant for Deloitte Ireland, specialized, among other things, in the blockchain application for financial institutions. So we'll tackle those topics in the coming minutes. So Peter, the first question will be for you. Could you please help us understanding more what is the blockchain, because there's a lot of people talking about that, but what really is the blockchain? Can you please update us a little bit on how it works?
I mean, first of all, I'd go point out it isn't that there is the blockchain. You know, blockchains are just a data structure, and if you want to understand what that means, well, you really got to go back to cryptography. And you know, a lot of us probably think of cryptography as, you know, sending secret messages and so on, and that's certainly part of what cryptography does. Another key part of what it does is it talks about signing messages. You know, much like the signature that you might write on a letter, a signed message simply means that, you know, I can get that digital data, that message, from someone I don't trust, yet I know it really came from someone who I do trust. So then what's a blockchain? Well, if we have signed messages that let us know things about, you know, statements made by people we trust, a blockchain is just a way of taking all those messages and combining them into one data structure, so that when I get one message, I can also know that other messages exist, and I can link them all together, and I can determine, do I have the full set? Now, this sounds all very abstract, but I mean, what if these messages are something like, I sold a house, and I sold it to her? I might want to really know, does a message exist saying I sold a house and I sold it to him? Because those two messages conflict, you know? And if I don't have the ability to determine I have the full set of messages I might care about for a subject, well, if we're talking about selling houses, I can get away with selling a house twice. And in Bitcoin, of course, this is very important because we only want Bitcoins to be able to be sold once. And there are many other cases where this is true, and you know, this is really where blockchains fit into cryptography. It's not like blockchain is separate, rather it builds upon existing cryptographic techniques. And you know, I'll make the point, chances are about 1/3 of you are using blockchain right now for web browsing, because that's one of the foundational things in certificate transparency of how you make sure you're actually talking to the right website. I might get into more details how that works, but
well, thanks for this first overview of how it works. It's not part of the question set, but could you just make a small update on the link between the blockchain and the Bitcoin?
Well, I think one of the things where the sort of term the blockchain comes out of is people hear Bitcoin, and if you're a Bitcoin enthusiast, you might want to think, well, everyone should use Bitcoin for blockchain-related applications. I mean, sometimes that makes sense, sometimes it doesn't, but I think that's kind of skewed the terminology in ways that don't necessarily need to be true. Whereas, for instance, I may have a purpose, like say a land title registry, where I will create a blockchain for that purpose. But my blockchain is going to be different than his blockchain because the messages I'm putting in that blockchain, maybe about selling houses in, Paris, are going to be very different than the messages he would put for some totally different reason.
Thanks for the second update. We dealt with the Bitcoin. You can't go right now into a Starbucks paying with Bitcoins. And if you could, nobody does, but that's a different topic. Is Bitcoin dead, according to you, and can you separate the life of the Bitcoin from the life of the blockchain then?
I'd point out, like, when I go into that Starbucks, can I pay with PayPal? And the answer is no. Does that mean PayPal is dead? Well, PayPal is still useful for other things. I mean, I've probably used PayPal once or twice this last month. I didn't use it at Starbucks. I used it to buy things online. Much the same ways that I've used Bitcoin probably, a dozen times last month to move money around from one country to another, be it, buying things online or, for that matter, my consulting business getting paid. It's just that it's a different use case, and Bitcoin remains relevant for some things. Equally, I mean, when you say, do you have to separate Bitcoin from blockchain? Well, what type of blockchain are you trying to build, and what are you using it for? I mean, I was just talking to someone at W3C about how could we use the Bitcoin blockchain to make blockchains about software distribution more secure. Well, that just means I take, one blockchain for, say, a piece of software, enumerating all the releases of it, and I might then root it in Bitcoin to make it more secure. But, there's still two separate data structures, and I'm just adding the security of one to the security of another.
So you don't necessarily need Bitcoin for the blockchain's growth.
Exactly, you don't. It's just a type of guarantee.
Thanks for that. I'll jump to Ashley on a very general question. Why is the blockchain seen as potentially revolutionary?
So I think the most revolutionary thing is the relocation of trust. So trust right now is located with the intermediaries of a transaction. So an intermediary can be PayPal, the bank, it can be Spotify, being the intermediary between musicians and listeners. On a blockchain, you have no intermediary, you just have the peer-to-peer transaction. So what that means is that as these peers are transacting, like Peter was describing, and they're signing their transactions, they're starting to build trust. They're building trust in the whole context of the blockchain, and then also within specific applications, the context on top of those. What that means is then they start building a reputation. And if that reputation can now be start to understood as being maybe like a primary asset or something that's more valuable to the peers in those marketplaces, and then that means that perhaps we don't need money to be the primary connector between peers or between parties as they're transacting. So one application of this, there's a microgrid in Brooklyn where there's 6 community members that have are buying and selling excess solar energy between each other. And they could use the blockchain, or are using the blockchain, to record how much solar energy they're producing or they're consuming. So what that means is that they could be buying and selling without actually using money to facilitate that transaction, and instead establish like quarterly or timely periods where they settle up in what other form they describe.
Thanks for that, Ashley. I'll jump then to Lory with this question. If blockchain really managed to take off, and if it does become the system which enables everyone to interact and transact without central intermediary, as she said, who could be hurt the hardest? Who are the intermediaries that we don't need anymore?
Sure, I think that's a very interesting question for sure. So I'll give you two scenarios or two examples. One, perhaps non-financial service to start. So if we look at what the Honduran government are doing right now, and that's actually registering every single land title on a blockchain. And the reason they're doing that is to actually reduce the amount of fraud when it comes to land titles. So obviously people can test, I own the house, or I own the land, or you own the land. So they want to get around that problem. So thereby obviously reducing fraud, number one. Number two, making things transparent, making things easy to transact with, or easy to transact between people when buying a home. Also, reducing the cost of the conveyancing. So one of the people or sectors that may be disrupted, to use that overused term, may be the conveyancing lawyers. So back in Dublin, where I'm from, we're actually seeing a lot of lawyers attending conferences just like this to learn about blockchain, to understand, actually, hold on, how relevant are we, and how is this going to impact us in the future? A financial services example would be, I guess, whenever there's a transaction between two parties, so person A and person B, and if there's any point in the middle where they have to do a reconciliation or they have to do a settlement, well then chances are blockchain could be used to remove the need for that intermediary, as Peter and Ashley have mentioned. So when it comes to settlements, when it comes to clearing, so if we look at the likes of, I guess, the DTCC in the States, if we look at Euroclear, if we look at Clearstream, they're all working really actively to try and understand how they can use blockchain before potentially something comes along to, I guess, change the way they do business.
Thanks for that, Lory. That's also not a question that we discussed before, but can you update us maybe or give us an example of a concrete example of a blockchain project on which you have been working in the last weeks?
Sure. So a recent example here would be work that Deloitte has done with a bank in Ireland called Bank of Ireland. So effectively, they wanted to explore using blockchain technology. They wanted to stop talking. Last year was the year of talking when it comes to blockchain, and this is the year of doing, so the proof of concept. So we devised a proof of concept with Bank of Ireland to basically create a single source of truth. They had multiple data sets, so they wanted to use blockchain technology to bring those data sets together to provide a single source of truth, which then also falls in line with a regulation called MiFID II, where you have to be able to store every single transaction and touch point for that particular customer. So at any given moment, if the regulator comes in, you have to be able to demonstrate every single transaction, every single contact, whether it be email or phone, to demonstrate that the right products were sold based on the advice but the right products were sold based on the information that was at hand. So it was also to get around, I suppose, to prove that no products were missold. So looking at the whole area of PPI and so forth. So that's a recent example that we've been working on. So the phase 1 is now complete. Phase 2 is underway.
Thanks for sharing this insight and not secret, but almost project you're working on. The next question will also be for you. There has been a lot of buzz again within the blockchain regarding notably the R3 consortium project that some of the people within the audience have heard about, I guess. We have heard a lot of things about this project. We've heard that financial institutions are interested in what they call separate private blockchain. Banks are fearful, we know that, with the use of Bitcoin. They want to have discrepancy between Bitcoin and blockchain. We discussed that. Can you update us on your vision regarding the fact that this R3 project could become a kind of real infrastructure project and that it could simply replace the whole infrastructure they are trying to build?
Yeah, sure. It's an interesting one. I think for those who don't know the R3 consortium, there's about over 40 banks part of this consortium. So what's really interesting about this instance is that imagine how difficult it is to work with 40 banks. Like it's hard dealing with 40 of anything. So when you have 40 large institutions trying to work together on something, it's going to be hard. So is there going to be something groundbreaking and revolutionary with 43 big, powerful institutions working together in the near term? No, is my personal view on that. What we are seeing are smaller actual consortiums coming out, or consortia. So there's a one based on called Chain, who's working with, I think it's Fidelity and Citi and a number of other institutions, but it's less than 10, and they're making great progress. and I'd imagine because just the politics are simply easier. I know I'm working on a project back home around a KYC utility or exploring it, and there are 4 entities involved, and even that's complicated. So 43 institutions, that's got to be pretty arduous. So I think that's an important point. Another important point in relation to this whole area is regulation, and we had the Francois speak earlier, and it was really impressive to see him talking about blockchain and talking about fintech in France, and I implore more governors of the central banks to really explore this subject. So I was really impressed to see that. But what's happening here is that if you have multiple financial institutions I guess, interacting with one another using blockchain technology, well, what happens if you then give read access to the regulator? Then the regulator is part of that new world, that new data ecosystem. So the onus is pushed from the banks to report to the regulator, because the regulator is then looking at near real-time data. The power is very much in their hands. So it's going to result in easier and more timely supervision.
Thanks for updating us on this. It's a pretty complicated topic. I think that even companies that are working on the topic do not necessarily understand every aspect of the topic. We will end this panel with a question for Ashley. Should you launch a blockchain technology-based startup yourself right now? What pains, would you try to solve? Or what type of sector would you try to get into?
So I look at blockchain as a complementary system to the existing financial system. So I would look at where is the existing economic system not working. And then there's certain criteria that emerge alongside that for the blockchain application you're developing. So it has to be a marketplace. That marketplace has to have the human component inserted, and you have to have like a system of governance for the rules of that marketplace, and that marketplace has to have rules of reputation. So these criteria are based upon some work that I did with some others in upstate New York with farmers, and we developed a complex barter system that uses reputation. The reason we chose this community of farmers is that they don't have access to capital in the existing financial system because mainly they just don't have the money to do so, and they're also not willing to take out loans because the average age is 50 and they don't have people to leave their farms to. So we thought, well, could we use the blockchain to record the exchanging of the resources that they do have and allow them to build a reputation within that community, use the ledger of the blockchain to record like a community currency. So they allow them to create a value in the US dollar. They don't actually exchange the US dollar, it just creates a comparison. And then they use a system of credits and debits to each other. So that looks like, you know, I have a maple sugar machinery. I'm gonna value that at 60 US dollars or in a community currency. For use of that machinery for 1 hour for you to take your sap and turn that into maple sugar. So we did develop that system with some high-level categories and a way for people to connect and search through it. So I think like looking at problems like that, like places where people can't actually depend on the existing and look to alternatives and then to begin to develop based upon that criteria. Another example is places where value is currently locked up, so like creative content, so music and art and things like this. So if you're an artist and you upload your song, you don't have on something like Spotify or Apple Music, you don't actually have access or direct access to people that are interacting with that piece of music. Or a trusted ledger where you can see who's remixing that song or reusing it in certain contexts. So in a blockchain system, like Consensys has in development a project called Ujo Music, you can actually upload your piece of content, whether it's music or art, attach the rights holders that are associated with the origination of that content, and then create some rules about licensing and reuse, and then you can begin to sort of interact and interact with other people, other entities that are going to create new value out of that piece of content. So I think experimenting with how to start to reward people for their reputation and for their additions to value that can't currently be accessed is the direction to start to think about.
Well, thanks very much for that, Ashley. We will close the panel right now. Thanks for having provided us with all those insights. We are now pretty sure that the blockchain is there to stay, that it will definitely change not only the financial industry, but other industries, and maybe that the most innovation could come from unexpected area. So thanks for that, and we obviously remain all available for those in the audience that want to discuss the topic after this panel at the cocktail or in the between. Thank you very much.
Okay.